What is one big market shift coming up in 2022? This is what you need to know next. Happy New Year! Hey everybody, I'm Gary Massa with Massa & Associates, and thanks again for joining me on the very first edition of 2022 of Tips Tuesday. Now, are you guys as excited about 2022 as I am? I don't know, but again, 2021 was a roller coaster ride. It was supposed to be the year of getting back to normal coming out of COVID, but I don't know about you, but I don't really see much of normal happening last year. There's just a lot of crazy things that happened. But going into 2022, we are, especially in terms of the real estate market, looking to get back to some normality, if you will. One of the biggest things or themes I think that we're going to see this year, when everybody's been asking me, what's a real estate market looking like in 2022? What should we expect? I think the biggest theme to keep our eyes on is the Fed raising the interest rates. Now, again, if you guys have been following along maybe the last couple of months, obviously inflation is going crazy. We have supply chain issues, etc., etc. Prices of homes are going skyrocketing, a ton of competition, etc. But one thing that's driving that is very, very low rates and absolutely super low inventory. Again, we talked about this many times last year in some of the Market Update Mondays, if you've watched, is that, when more homes become available, or when the inventory starts to rise, I think it's going to, or the market starts to change. It'll be dependent on two things: the rise of interest rates and or the increase of actual inventory in our markets. And that's when things will start to level out, in my own professional opinion. But again, the Fed has come out last week and said that they are going to raise interest rates 3 times over the next year. And it's expected the first rate raise is supposed to be around March, is what they're expecting. The other two, they're not sure when, just depending on how the markets respond and inflation numbers start to level out. They're getting back to normal, stopping the bond buying process as well, and to start to raise the interest rates by seemingly like 1/4 of a basis point. Now, again, if you guys remember the last time, because again, this would be the first interest rate raise in 3 years. The last time they did this was late 2018. And if anybody was paying attention to the real estate market back then, like I was, strangely enough, that actually, if I look back, I believe was actually our bottom of our last market cycle. Everyone sees all the expansion, but again, we had a leveling off and actually a quite a significant pullback in that year. And many of the major, real estate companies in our area posted losses. I remember a lot of the CEOs and leaders talking about it being kind of one of the worst years or softer years that we've seen in many years. But again, it kind of stemmed from as soon as the Fed started raising interest rates, actually the demand for homes went down. Inventory went up a little bit. And if you remember correctly, in later 2019, they dropped the interest rates back down to 0 because the economy responded pretty negatively to those interest rate rises. And that's when things started taking off again. We hit COVID, etc. The rest is history. You remember that. But the point being is, I think it's going to be very important to watch how the market reacts to this first interest rate increase. I think that it's going, if history's taught us anything, it's going to create some sense of urgency for buyers to get out and buy a home before the interest rates go up, which again could start bolstering home prices and competition again. But then I feel like once we hit the first one, we'll still have some demand. After the second one or two is going to be interesting to see if home buyers aren't ready to stomach slightly higher interest rates. Now, are we going from 3 to 3.5%, maybe closer to 4? Those are still great interest rates. But the point being is, there's going to be some changes in the market, maybe a little bit of volatility. I don't think that we're going to have any crash or we're going to see any major pullback, but more of a normalization or like a leveling off, if you will. But the point being is, there will be some changes. And so if you are in the market to buy or sell a home, it might be very advantageous for you to get yourself in gear in the first quarter before those interest rate, increases. Again, whether you're a buyer or seller, there may be different points to consider. Sellers, I think it's really best to get your home listed and sold before that interest rate, increase, just to make sure you're taking advantage of the demand now. Buyers, it actually may help you to pay a little bit more of an interest rate, but have less competition and more homes available for sale. as we start to see more homes come on the market in spring and summer. So anyways, just a couple thoughts. However, if you are thinking about buying or selling a home in this year and want to see how that can affect you directly, please call me directly. Leave a message down below. I really want to hear your thoughts of how you think this will affect or impact the market. Again, happy Tips Tuesday, and we'll see you next week.